Ladies and gentlemen, good day and welcome to the Q3FY22 earnings conference call of Deep Industries hosted by Go India Advisors. As a reminder, all participant lines will be in the listen-only mode, and there will be an opportunity for you to ask questions after the presentation concludes. Should you need assistance during the conference call, please signal an operator by pressing star then zero on your touchtone phone. Note that this conference is being recorded. I now hand the conference over to Ms. Surbi Sutaria from Go India Advisors. Thank you, and over to you, ma'am.
Thank you, Rutuja. Good afternoon, everybody, and welcome to the Deep Industries earnings call to discuss the Q3 FY22 results. We have on the call Mr. Paras Savla, Chairman and Managing Director, and Mr. Rohan Shah, Director Finance and Group CFO. We must remind you that the discussion on today's call may include certain forward-looking statements and must be therefore viewed in conjunction with the risk that the company faces. May I now request Mr. Paras Savla to take us through the company's business outlook and financial highlights, subsequent to which we will open the floor for Q&A. Thank you, and over to you, sir.
Thank you, Surbi. Good afternoon to all of you, and welcome to the call to discuss Deep Industries Q3 performance. I hope that you and your loved ones are keeping safe in this difficult time. I trust you had an opportunity to go through the earning presentation, which was shared earlier. Just to give you a brief introduction about our company, we are one of the largest outsourced natural gas compression company providers in India. We have presence in niche segments like gas compression, gas dehydration, workover and drilling rigs, and integrated project management services. Indian government is focused on increasing gas consumption in the energy basket from currently 6 to 15%. Deep is very well prepared to participate in this opportunity. We are seeing the benefits of our action to maximize our profitability, cash flows, and returns for our shareholders. The order book stands now at around 556 crore to be executed in next 18 to 24 months. This gives us strong revenue visibility in terms of sustained top-line growth in the coming quarters. We have been able to gear up for the growth while keeping a sharp focus on our balance sheet strength and deleveraging. Deleveraging has been on our focus for last many quarters, and I am happy to report that we are currently a zero net debt company. Also, the business continues to generate healthy cash with free cash flows at enterprise level being 73 crores and INR 58 crores in FY21 and H1 FY22 respectively. On the revenue front, we have surpassed our FY21 standalone top line of rupees 178 crore with our 9-month current revenues at rupees 195 crore. Along with this, we have been able to expand our service offerings while maintaining strong geographical footprints and are currently operating at over 20 locations in India. Our subsidiary RAS started manufacturing CNG booster compressors Q4 for FY21, and that gives us another growth engine. RAS has annualized installed capacity of 250 units per annum, which we plan to increase over next 3 years. We continue to take strategic initiatives to position our gas processing platform for a more efficient and sustainable future. We have done this through continued investment in while adopting new technology as well as upgrading our existing fleet. Today, Deep has a wide range of fleet of both compressors and dehydration units. Our rig fleets are fully occupied with current utilization at 100%. The optimal asset utilization will ensure that we deliver superior value to our stakeholders in the long run. We cherish our deep relations with both public and private sector clients and have ensured that they are provided with world-class resources and services. With that, I would like to hand over the call to Mr. Rohan Shah, our CFO, to take you through Q3 numbers. Thank you.
Thank you. Good afternoon, everyone. I'll go through the Q3 financial performance in brief. Standalone revenues increased by a 44% YOY basis to rupees 61 crore, mainly on account of better volumes and contribution by new projects. Consolidated revenue showed higher growth of 74% YOY on account of overall volume growth and contribution by subsidiaries. Standalone EBITDA up by almost 75% on YOY basis at 27.65 crores, with EBITDA margin of 41.65%, helped by overall improvement in operational performance. Standalone PAT stands at rupees 15.9 crores with PAT margin of 23.95%, while consolidated PAT is at rupees 17.17 crore with PAT margin of 22.69%. 9-month FY22 standalone revenues were reported at rupees 195 crores against rupees 127 crores corresponding to the same period of previous year. Similarly, 9 months FY22 standalone EBITDA is at 84 crore as compared to around 57 crores corresponding to the same period of previous year. During Q3, there was a slight impact on top line as compared to Q2, and this was mainly due to delay in some interlocational movement of rigs and mobilization of resources on time on account of high COVID cases during December 21. This situation has been normalized by Jan 22. Deleveraging continues to be our priority. We have reduced our total term debt from 200 crores in FY17 to just 9 crores at present. We are now zero debt company on net debt basis. Our debt to EBITDA ratio is one of the best in the industry at 0.1x. We have been able to strengthen our balance sheet and achieve this by continuously investing in the projects which have quicker payback periods and generates healthy cash and EBITDA. For H1 FY22 period, our operating cash flow to EBITDA was 112%. With this, I would now like to open the floor for questions.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question may press star and 1 on the touchtone telephone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. The first question is from the line of Gautam Gosar from Perpetuity Ventures. Please go ahead.
Hi, thank you for the opportunity. I have a few questions. So my first question is on the order book. So I would like to know, like, out of your total order book of 556 crores, could you please tell us the breakup of public sector clients and private clients?
So we have not calculated that breakup because our majority of clients are public sector clients, except 1 or 2 who are MNCs. So I would say more than 70% would be public sector.
Okay. And my next question is on your subsidiary. So how much revenue has it generated in the last 9 months of its operation? And does the order book include RAS orders as well?
Yes, this total order book is inclusive of RAS order book of around 45 crore. And during last 9 months in consolidation, we have a contribution from RAS equipment as well as our Dubai subsidiary. Both put together, they have contributed of around 43 crore.
Okay, that is helpful.
Yeah.
Thank you.
Thank you. Participants who wishes to ask a question, please press star and 1. The next question is from the line of Sudhir Bodha from Right Time Consultant. Please go ahead.
Yeah, good afternoon, Paras bhai and Rohan bhai, and congrats for healthy EBITDA and healthy result. So my questions are, this time the company has reported good EBITDA compared to last quarter or maybe last year. So is it a composition of sales where higher margin sales are more compared to last year's or last quarter's sales? So what could be the breakup of console sales in terms of like how much from gas dehydration, how much from compression, how much is from project management? If you can provide the percentage-wise breakup, if possible.
Right. So we have always been tried to be operationally effective, and with regards to increase in EBITDA margin, last year was pretty not good because of COVID, and so there because of dip in top line in last year, overall EBITDA had some pressure, but this year we have been able to regain our margins, and if you'll look through our track record of last 10 years, we have always been reporting EBITDA above 40%. I think this would continue to maintain above 40%. And with regards to revenue mix of various services, more or less we have been able to maintain equal contribution from all four services, except from gas dehydration, where we have as of now lower contribution, and which we are aiming to increase to take to parity of all other services.
Great, sir. And what would be the, sir, if you can share your outlook in all the verticals for next FY23, considering the healthy order book and now countries going with the gas economy. So if you can share your outlook for next year in all the verticals.
See, India is already witnessing a boom as far as the oil and gas services business is concerned, or other oil and gas service or as the sector itself is concerned. With the increase in crude oil and gas prices, all the activities have been increasing rapidly. If I have to look about for the new drilling, I think every companies are looking forward to drill new wells to find out more and more reserves of oil and gas so that they can monetize of the reserves that they have. And that every services which are allied with it, like the workover services or the gas compression services or the gas dehydration, these all are interlinked. So the moment there is a amount of momentum in the sector itself, that gives the rise to the areas in which we are providing services. So we are quite bullish on across our company in all the four sectors we see. Relatively maybe few percentages up and down. That could be because of the nature, the kind of timings and the client. But by and large, I believe that all these four sectors seem to be very, very promising.
Mm-hmm. So what could be the growth outlook? Like, say, we will be able to grow at, say, 25 to 30% next year?
See, that would be very difficult to, to envisage. But it is historically, it is seen that even if you see our scenario in last 5 to 10 years, there would be a year or two which would be not kind of a flat, but maybe 5%, 10% kind of thing. And then there would be the third year, which would jump to, substantially high growth. So, but average, if you have to see, our growth has been always in the ranges of 15 to 20% year on year, as an average.
Mm-hmm. Great. Thanks, sir, for the opportunity and all the best.
Thank you.
Thank you. Anyone who wishes to ask a question, please press star and 1. The next question is from the line of Manan Shah from Moneybee Securities. Please go ahead.
Yeah, hi, sir. I'm fairly new to the company, so pardon my ignorance. I'm just trying to understand the business of the company. So basically, we invest in these assets or the plant and machinery, and then we charter or rent these assets to the oil and gas company.
So that is likely the kind of business that we are into. We, as far as be it gas compression or be it rigs or be it gas dehydration units, we buy these equipments and configure to the requirement of what our client wants, and then we go ahead and commission these plants at the client's installations. And then we operate and maintain the equipments along with the production for our client. So we get revenue of hiring from these clients. So typically we own these equipments.
Okay. Okay. So currently, what is the utilization of these equipments that we have?
So largely, I would believe if all that put together, I think we should be close to around more than 80%.
More than 80% of our equipments are utilized.
Yes.
So that would only leave a limited scope for us to grow based on the current equipment capacity that we have, right?
As far as the current equipment is concerned, yes. But as I mentioned in our presentations, if you would have got a chance to look at it, we have also got into the integrated services model. Wherein our model we are trying to grow and while to keep the asset light model. So we try and utilize our own services to the extent we have our own equipments. And at the same time, we also outsource some of the equipments from the market, and then we combine it as a pool, and then we offer it to our clients. So that model is something that we are eyeing upon, which will have a good, we will have a good chance to do the majority of the jobs in a combined way, and thereby reducing our investment into assets.
Okay. So I believe we would be generating a decent cash going forward, almost 80 to 90 crores. Then how do we plan to utilize this cash going ahead?
As we mentioned, our plan is to utilize the cash flows into the new growth, and which is very likely. So apart from the gas compression and the gas dehydration units, we have also now ventured into the gas processing field. Wherein if my client wants to set up a early production facility, if my client wants to remove COT out of the gas, then we are trying to combine the services that we are already providing along with these value-added services. So these amounts that we, the kind of the cash that we have built over a time, or rather we would be building that over a time, would be used in utilizing the growth.
So they would basically go into purchasing equipments, or?
Yeah, it would go in purchasing of the equipments and the technologies.
Okay. My last question is, we have this very big intangible asset on our balance sheet. So you can just tell me how was this created and what is our plan with this?
So this is a goodwill created out of recent demerger. So it will stay as it is going forward in our balance sheet as goodwill.
Okay. Okay, thank you. I'll come back in the queue.
Thank you.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Amrish Kumar from Geosphere Capital. Please go ahead.
Hi, sir. Thank you for the opportunity. Just one question from my side. I am new to the company. So can you just explain this CNG booster compressor business of yours? How much does it contribute right now? What is the opportunity size here? And how fast this market is growing for you? And what would be your market share in this?
Right. So CNG booster compressor manufacturing we have started in last Q4 only. So it is just 1 year old company. We have started this in our subsidiary named RAS Equipment Private Limited. And in this particular company, we are manufacturing CNG booster compressors of various kilowatts, which are used for compressing the natural gas CNG at CNG stations and the CGD network daughter mother stations. So in this particular sector, there is a huge demand which we are envisaging because of new CGD licenses allotted throughout the country. There is a huge demand coming up for this type of compressors. We envisage that yearly demand is more than 6,500 equipments is the demand on country basis, and of which we try to get our space because there are very few players as of now who are into this sector. Our existing plant has capacity to manufacture 250 units a year, and which we are planning to double in next 3 years.
Okay, and one compressor would cost how much to one filling station? typically?
Would be in range of 40 to 55 lakhs type, depending on the configuration. Yeah.
And you are planning to increase your capacity, doubling your capacity in 3 years. So basically, you are envisaging about 25% growth in a year.
Correct.
Not more than that.
So we want to go cautiously and steadily. So yes, if we'll be able to penetrate more in market, we can increase the capacity.
Okay, sir. And the related question would be, in your other current areas of operations, you have sizable market share. So the only way to grow for you is for the market itself to grow. So, or to tap into the areas where you are not present with your current technology. So can you give us some idea as to which other areas in which you are not present are you trying to go into?
So with regards to existing services business sectors, in gas compression, I agree with you, we have a majority of market share. But in other 3 verticals, we have a lot more to cover. So there we have a very good potential upside. And in gas compression business as well, if you will see, out of total gas compression requirement of country, only 30 to 35% is been outsourced as on date. So, and this outsourcing proportion is increasing year on year. When we started way back in 96, it was first in its time when client had came up with outsourcing requirement. So I would say over a period of 25 years, it has increased to 30-35% of outsourcing proportion, which we are envisaging to increase year on year, because if you look at developed countries, there this proportion is inverse. They have more than 65-70% outsourcing, and only 25-30% is captive. So we feel that as we always follow the developed countries, this proportion is going to increase in India as well. So there is a potential upside in my business as well.
Okay. And sir, what kind of capital expenditure would you require for this 15-20% average growth that you are talking about?
See, as of now, our equipment utilization is in range of 80% or so. So if we'll have to increase our revenue, first we are focusing on increasing our utilization, and after utilizing it at 100%, we may go for capex of new equipment. So it is difficult to predict how much amount would be required in growth of 15-20%, but because we do capex only on award of a confirm order. So as and when we get an order, and if client is insisting on new equipment, then only we go for capex.
Okay, got it. So it is mostly client-driven business that you do. Client asks and
so
then
my majority of business is tender-based, and it would be on contractual basis, yes.
Okay, got it. Thank you, sir.
Thank you.
Thank you. Participants, please press star and 1 to ask a question now. The next question is from the line of Anil Sharma from EB Capital. Please go ahead.
Yeah, hi sir. Thanks for the opportunity. I just wanted to understand, the cost savings a company can have if it, does outsourcing of compression and dehydration instead of doing it in-house. So if you can provide some kind of numbers in that.
So you are asking from client's point of view?
Right.
Yeah, so outsourcing is always better from client's perspective, because for them it would be then asset light, plus operational efficiency is the major concern for clients like PSUs, because if they do this in-house, then they are achieve the efficiency they want, and they cannot penalize their own self as well. So contractors, if they outsource it to players like us, they can expect guaranteed operational efficiency more than 99%. So there they have an upper edge.
Okay. Secondly, sir, I wanted to understand your current bidding pipeline and the capex plan that you have for the next couple of years, specifically for the subsidiaries ours.
So bidding pipeline, we have bidded many projects, including our services business as well as for booster compressors. And we are eyeing on to get it converted into confirm orders. So as I said earlier, it is difficult in our business to exactly quantify the amount of capex which we will be going to do, because that capex is purely depends on award of contract. And as I said, we do capex only on getting confirm order. But for RAS, we are targeting to achieve our installed capacity of 250 units a year in second year onwards, so next year onwards. And with the increase in demand, we can double that capacity as well.
Okay. Lastly, sir, one more thing I wanted to understand was on the ONGC case. So I just wanted to understand what exactly was the issue, and have we received the full settlement as yet?
Yeah, the case was pertaining to the tender that we had submitted, and it was basically based on the qualification. That was the main primary concern of theirs, to which we had filed the case. The matter is currently sub judice, but we think that we would be able to resolve this issue very shortly. It's already resolved, so we are already in business now. But in respect to that particular tender, that matter is under, it is sub judice. So in shorter time, we think that we'll be getting the needed orders.
Okay. Lastly, one thing also, in terms of time, what's the exact timeline, sir, which is required to increase the gas compression capacity?
I didn't get that. Can you please say that again?
So in terms of increasing the gas compression capacity, what sort of timelines are required for the same? Lead time
normally it depends on the tender conditions. So some of the tenders stipulate the conditions of 120 days delivery, and some of them indicate 180 days. So depending, typically you may say that getting a new compressor, having an award, can take us around 6 months to install, commission and start that plant.
Okay. Thank you so much for the opportunity, sir.
Thank you.
Yeah.
Thank you. Participants, to ask a question, you may press star and 1. The next question is from the line of Mayur Lehman from Profit Mart Securities. Please go ahead.
Thank you for the opportunity. I just missed some of the part. Could you please give me an idea about the next quarter outlook?
So we have received some good amount of orders recently, and we are quite hopeful to get them started in coming quarter. So for Q4, I believe it would be more or less in as per our expectation. So I think the growth which we are expecting, sizable growth, is from coming year onwards.
Okay. Thank you, sir.
Thank you. You may press star and 1 to ask a question. The next question is from the line of Ankur Agarwal from Phillip Capital. Please go ahead.
Yeah, thanks for the opportunity, sir. If you can just elaborate on the nature of contracts that you have, what is the duration of these contracts, gas compression or otherwise? Are these like long-term contracts or short-term, mid-term? And secondly, on the CNG compression stations of your subsidiary, is it again like the service-based model, or is it like an outright sale of equipment kind of a model? If you can just explain a bit on that. Thanks.
Sure. So I'll take second question first. So for CNG booster compressors, we are manufacturing and selling the equipments. So these are a mixture of both outright sale as well as O&M if client is asking for it. So we do both. With regards to our services contract, they are generally in range of 6 months to 3 years. So more or less, our contracts are in range of that, and majority of them are for 3 years.
And there's how does it compare with the asset life? Is there like an option of renewal, or you have to submit fresh bids? What kind of?
No, so it would come for re-award only. So it would be re-bidding.
Okay.
And my asset life is generally more than 15-20 years.
Okay. That's helpful. Thank you.
Thank you. Ladies and gentlemen, to ask a question, please press star and 1. The next question is from the line of Chaitanya, an individual investor. Please go ahead.
Good evening, sir. Am I audible?
Yeah.
Hello?
Sir, you are audible. Please go ahead.
Yes, sir. So, congratulations on the set of good numbers, sir. So, my question is related to the rig segment of the business, sir. So, in the Q1 presentation, you have stated that you wanted to increase your rig fleet utilization to 90%, and in Q2 itself, you had released 100%. And even now, sir, it's 100%, sir. So, I wanted to know, so why haven't you done any CapEx in relation to this rig fleet, sir? Because you have generated over 75 crores in the past 3 quarters.
Sorry, we could not understand it properly. I think sound is getting echo. If you can just...
Am I audible right now?
Sir, your voice is getting echoed when you start speaking.
If you can split it into 1 or 2 short sentences.
Can you hear me now?
Yes.
Sir, so in the Q1 presentation, you had stated that you wanted to increase your rig fleet utilization to 90%, but in Q2 itself, it went up to 100%. So are we planning to increase the capex on this rig fleet part? Because sir, even right now in Q3, as per your presentation, we are at 100% utilization, sir.
Yes. So as of now, my rig fleet is 100% utilized, and if in case the tenders we have bidded, if they are getting awarded, then we can go for new equipments, and that will result into capex.
Okay, sir. Sir, and on the second part, sir, sir, on page 6 of your presentation, sir, you have mentioned the 4 divisions of the company. So, sir, in the natural gas compression segment, sir, does that include our booster component subsidiary, sir?
No. So natural gas compression is different than what we are selling as booster gas compressors. So booster gas compressors are predominantly CNG compressors. They are different than this natural gas compression services.
Okay, sir. So, is it possible for the company to mention the financials of the subsidiary separately, sir? Because, sir, this is one of the many things that investor community is focusing on right now, sir. So, because if you are able to utilize all the 250 units, sir, it will approximately be, sir, about 25% of the sales right now.
Yeah. So, we'll definitely upload our subsidiary numbers on our website.
Okay, sir. Sir, and if I may, sir, I just wanted to stew in another question, sir. So, like in Q1 presentation, you had uploaded the utilization of the gas processing segment. However, in the Q2 and Q3 presentation, you have not. So, sir, can you please tell me the utilization of the gas processing segment? And from now onwards, can you upload the required information on consequent presentations from now on?
Sure, we'll try to include that. For your information, I would say that for gas compression, our fleet utilization is now more than 80%.
Okay, sir. Sir, is it possible for me to ask another question, sir?
Sure.
So, sir, on first page of the page 6 of your presentation, you have mentioned all the 4 divisions, sir. So, sir, is it possible to mention the EBITDA margins of each of these segments, sir?
So for us, these all 4 segments are as part of our services business only. These 4 segments we have segregated just to make investor aware that what all services we are providing. So segment-wise EBITDA, as of now, we do not have, and we do not generate as well. We'll look for if we can get that. Yeah.
So at a general level, which of these segments is the most lucrative, sir?
On an average, gas processing is having higher EBITDA than other 2.
Okay, sir. Thank you so much, sir, and best of luck for the future, sir.
Thank you.
Thank you. Before we take the next participant, a reminder to everyone to ask a question. Please press star and 1. The next question is from the line of Pujan Parekh from an individual investor. Please go ahead.
Yeah, hi. Congratulations on good results. Just wanted to ask about the price increases if you have done during this quarter, barring all the inflations going around in the world. So have you also increased the prices of your services? Thank you.
Our services are normally tender driven. So once we have submitted our prices, then we do not have an opportunity to change the prices in between the ongoing tenders. But as and when new tenders are, the tenders that we are bidding, we are including the inflation and the price rise that has happened, and accordingly we try and bid for the new contracts. So normally in every of our contracts, certain amount of that tolerance is taken into account.
Okay, thank you very much. Thank you.
Thank you. Participants, to ask a question, please press star and 1. The next question is from the line of Shrishti from Wellwin Consulting. Please go ahead.
Yeah, hello, sir. Oh. And thanks for taking my question. Am I audible?
Yeah, you're audible.
Yeah. So my first question would be, I just wanted to know the impact of inflation on the business and what factors affect our margins. And will RAS also have a similar 40% EBITDA margin?
Ladies and gentlemen, please stay connected. The line of the management got disconnected. Ladies and gentlemen, thank you for patiently holding your line. The management line is reconnected. Thank you, and over to you. So we had a question from the line of Shrishti from Wellwin Consulting. Shrishti, you may please go ahead.
Yeah. Hello, sir. Yeah. So my question was, what is the impact of inflation on our business, and what factors affect the margins? And will RAS also achieve the similar 40% kind of EBITDA margin? And also, does these contracts require bank guarantees? And what are working capital requirements for these contracts?
So I'll take them one by one. So with regards to bank guarantee, yes, our service contracts requires bank guarantees. Performance bank guarantees are required to submit with client to the tune of 3 to 7% of annual contract value. With regards to margin of RAS, RAS is a manufacturing business. There we cannot expect 40% EBITDA. But yes, we are targeting to achieve better margins at there also.
Okay.
And with regards to operating expenses, I believe in our services business with different sectors, we have different operating expense margins, which are fairly larger in case of rig services and integrated project management in comparison with gas processing.
Okay.
So
in inflation on the business?
Inflation, I believe we are exposed to the fuel prices. That is, diesel is being used in quantity for our rig services. So other than that, I don't think we have much impact.
Okay. Okay, sir. That's it from my side. And thank you so much for your time.
Thank you.
Thank you. Participants, you may press star and 1 to ask a question now. The next question is from the line of Seema Bajaj from RK Consultancy. Please go ahead.
Hi, good afternoon, sir. Thank you for taking up my question. So I have just one question. I believe your gas compressors capacity is 87,000 HP. So I just wanted to know that what was the utilization rate this quarter, and in general, what is the optimal utilization rate, if you could tell me?
So normally, this kind of business is normal utilization is believed 80-85% is believed to be good utilization because we have the equipment. We always need the equipment to be in spare because whenever the new requirements come, at that point in time, we should be able to configure that equipment to the client need. So typically, as far as the industry goes, 80-85% is supposedly to be the good utilization. And currently, as far as the gas compression business goes, we are optimally utilized for now.
Okay, right. Thank you so much, sir. That's all from my side. Thank you.
Thank you.
Thank you. Participants, to ask a question, please press star and 1. As there are no further questions from the participants, I would now like to hand the conference over to Mr. Rohan Shah for closing comments.
Ladies and gentlemen, thank you for joining us today. In case you have any additional or follow-up queries, please contact the team of Go India Advisors who address it on priority. Thank you.
Thank you. On behalf of Go India Advisors, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.
Thank you.